Welcome to This Week in Insurance News, where we take a look at 3 top headliners. First up, a study from the University of Southern California published in JAMA Health Forum notes a 442% growth in semaglutide prescriptions in just over 3 years. Access to medications like Wegovy, Rybelsus, and Ozempic within the U.S. healthcare system is limited. These drugs, used for diabetes management and potential heart disease prevention, are often not covered by insurers for weight loss, leaving many obese yet otherwise healthy adults without options. Federal spending on these medications has surged from $57 million in 2018 to $5.7 billion in 2022, driven by increased demand and expanded uses. The financial burden on federal programs like Medicare could grow significantly, with estimates suggesting an annual cost of nearly $3 billion for cardiovascular prevention alone. Patients on Medicare or Medicaid face significant barriers to accessing these drugs, with systemic issues and insurance requirements delaying treatment. Less than 1% of prescriptions are filled by individuals paying out of pocket due to high costs and limited insurance coverage. As federal spending on these medications skyrockets, the financial strain on programs like Medicare intensifies, exposing deeper issues of access and affordability. Now let's take a look at skyrocketing auto insurance rates in Georgia. What's driving the surge, and how it's impacting residents' auto insurance rates in Georgia are rising due to a combination of escalating costs, economic and behavioral factors, and legal system abuse. Since the mid-2010s, auto insurance spending in the state has increased at an annualized rate of 5.6%, driven by economic inflation, high replacement costs, and poor driving behavior. Additionally, Georgia has a higher incidence of injury claims and increased legal claim litigation, partly fueled by aggressive attorney advertising. The prevalence of uninsured and underinsured motorists exacerbates the affordability crisis, as many drivers either lower their policy limits or forgo insurance altogether, leading to higher costs for those who remain insured. Lastly, in insurance news headlines this week, Citizens Insurance in Florida confronts overcapacity and rate hikes. Citizens Property Insurance Corporation, Florida's state-backed insurer, is currently managing over 1.2 million policies, far above its intended capacity of 400,000 to 500,000. This overextension has led to significant operational challenges. To address financial strains and maintain solvency, Citizens has proposed a 14% rate increase, which could significantly impact policyholders. This hike highlights the insurer's struggle to balance financial viability with affordability, especially under the looming threat of hurricanes. In response, Citizens has initiated a depopulation process, transferring policies to private insurers. Just recently, the company has been given the okay to shed another 400,000 policies by the end of the year. This strategy aims to stabilize Florida's turbulent property insurance market, which is plagued by high claims, regulatory issues, and natural disaster risks. Thank you for watching our latest insurance news segment. We value your insights and would love to hear your thoughts on these recent changes and updates in the insurance industry. Don't forget to hit subscribe to stay informed about all the latest developments. See you next time.